like and subscribe. A money market account, MMA, is a special type of bank or credit union savings account with some features not found in regular savings accounts. Most money market accounts pay a higher interest rate than regular savings accounts. They also often include check writing and debit card privileges, but MMAs may come with restrictions that make them less flexible than regular checking or savings accounts. Until the early 1980s, the government placed a cap or limit on the amount of interest that banks and credit unions could offer customers in savings accounts. Many institutions offered small appliances such as toasters and waffle iron, along with other incentives to attract depositors as they couldn't compete when it came to interest rates. People began putting their savings into higher interest paying money market mutual funds, MMFs, also known as money market funds, MMFs. These mutual funds are sold by banks, brokerages, and mutual fund companies and are sometimes riskier than money market accounts. Congress passed the Garn-St. Germain Depository Institutions Act of 1982 under pressure. It allowed bank and credit unions to offer MMA that paid a money market rate which was higher than the previous capped rate. Money market accounts are offered at traditional and online bank and credit unions. One of the key features of MMAs, aside from paying higher interest rates, is the protection of your assets. MMA deposits and earnings at a bank are insured by the Federal Deposit Insurance Corporation, FDIC, an independent federal government agent. The FDIC covers certain types of accounts, including MMAs up to $250,000 per depositor per bank. This means if you have other insurable accounts at the same bank, checking, savings, certificates of deposit, they all count towards the $250,000 insurance limit. Joint accounts are insured for $500,000. For money market accounts taken out of the credit union, the National Credit Union Administration, NCUA, provides a similar $250,000 per member per credit union insurance coverage. If you want to insure more than $250,000, the best way to accomplish that is to open up an MMA at more than one bank or credit union. Money market mutual funds, however, aren't insured by the government, even if you take one out at a bank. Many money market accounts offer limited check writing privileges and include a debit card with the account. That makes an MMA a combination savings and checking account, which can be handy if you want to receive a higher interest rate, but you only need to access your funds on a limited basis. Federal Reserve Regulation D limited to 6 the number of withdrawals and transfers you can make from an MMA each month. The types of transfers affected are pre-authorized transfers including overdraft protection, telephone transfers, electronic transfers, check or debit card payments to third parties, ACH transactions, and wire transfers. That restriction was lifted in April 2020, but some banks still limit the number of times you can make debit transactions or transfers from your MMA. Both money market accounts and money market mutual fund offer quick access to your funds. However, remember that while the federal government lifted restrictions, your bank still may limit the number of withdrawals and transfers you make from your MMA. Individual banks and brokerages firms also may place limits on how often you can redeem your shares in your money market mutual fund. In addition to transaction limits that your financial institution may impose, money market accounts generally require you to deposit a minimum amount to establish an account. They may also require you to maintain a minimum balance to receive the maximum interest rate. Both money market accounts and money market mutual funds charge fees. Fees are important to recognize because any service charge that is imposed on your account reduces your earnings or interest. In a money market mutual fund, the main fee is the expense ratio, which is paid to the fund company and to pay the fund manager and other operating expenses. Many MMA charge a number of fees, including a monthly charge that kicks in if your balance falls below the minimum, Some institutions charge a fee no matter what your balance is, while others waive the monthly fee if you make a regular monthly deposit, direct deposit. Minimum deposits, balances, and rules and regulation fees vary among financial institutions. Other fees may include check writing fees for government going over the account's maximum number of allowed checks in a month, annual account service fees, or a fee your account falls below a stated minimum balance. Here's a tip. The average interest rate for an MMA was over 0.59% in May of 2023, while the average savings account paid about 0.4%. That money market rate represents an average of $10,000 to $100,000 product tiers, and the stated savings account rate is based on the $2,500 product. One of the original attractions of MMAs was the fact that they offered a higher interest rate than savings accounts, and on average, MMAs do continue to outperform savings accounts. MMAs can offer higher interest rate because they are permitted to invest in certificates of deposit, government securities, and commercial paper, which savings accounts can't do. Money market account interest rates, as well as those of most deposit accounts, are variable, meaning they can change with economic conditions. How interest is compounded yearly, monthly, daily, for example, can have a substantial impact on your final return, especially if you maintain a high balance in your account. Here's a side note. While the average MMA rate is higher than the average savings account rate, the best high-yield savings account often pay as much as or more than the best money market rates. Dividends yields produced by money market mutual funds tend to be slightly higher than the interest earned on money market accounts. However, the return on both varies with the performance of the underlying investment, and neither typically keeps up with inflation. You have the option to reinvest in the dividends in your money market mutual fund. Reinvested dividends purchase additional shares in the fund. Interest in your money market account is automatically added to the principal and compounded. Money market mutual funds typically maintain a net asset value, NAV, of $1 per share. As your account grows, the number of $1 shares you own increases. Money market accounts aren't the only deposit accounts offered by banks and credit unions. Other accounts may include features or even interest rates that may make them competitive with or superior to money market accounts. Here's a side note. While they sound similar, a money market fund isn't the same as a money market account, or MMA. Money market funds, or mutual funds, that pool money for multiple investors in different investment vehicles. Your principal can go down in a money market fund, but it can't in a money market account. MMFs are also not federally insured, while MMAs are. Regular bank or credit union savings accounts pay interest just like MMAs, though the interest paid by MMAs tend to be higher. Some regular savings accounts offer a slightly higher interest rate to compensate for the lack of flexibility, i.e. check writing, offered by MMAs. Both savings account and MMAs are FDIC and NCUA insured. Both allow you to make as many deposits as you like each month. Unlike MMAs, however, regular savings accounts typically have no or very small initial deposit or minimum balance requirement. Banks and credit unions offer high-yield savings accounts, and depending on the institution, the interest offered may be higher than what you can get with a bank's MMA. Just like MMA, high-yield savings accounts are FDIC or NCUA insured and may require a higher initial deposit, minimum balance, and maintenance fee, or have penalties if your balance falls below the required minimum. Checking accounts have one major advantage over MMAs: unlimited transactions, checks, ATM withdrawals, wire transfers, and so forth. They are also FDIC or NCUA insured. This makes checking accounts perfect for daily financial transactions such as writing checks, electronic bill payments, and access to cash through an automated teller machine, ATM. The main weakness for regular checking accounts is that they offer very low, often zero, interest rate. This type of checking account, like high-yield savings, offers interest rates that rival and sometimes exceed those found with money market accounts. As with MMAs, these types of accounts come with a requirement to maintain a minimum daily balance and a penalty fee for failing below that amount. High-yield checking accounts also frequently have a cap, for example, $5,000, above which the high interest rate no longer applies. Some high-yield checking accounts require you to make a minimum number of debit transactions each month. All these stipulations can make maintaining a high-yield checking account a time-consuming chore. In other respects, though, high-yield checking, like regular checking, with unlimited checks, a debit card, ATM access, and FDIC and NCUA insurance. This type of checking account may offer an impressive sign-up bonus and other rewards such as high yields, ATM fee reimbursement, airline miles, or cash back. The caveats resemble those with high-yield checking. High fees unless you maintain a stated minimum daily balance, a required minimum number of debit card transactions per month, mandatory monthly direct deposits, and more, depending on the situation. Otherwise, rewards checking functions like a regular checking account as noted above, including FDIC and NCUA insurance. A CD is a time-saving account. In exchange for a fixed interest rate that may be higher than you would get from a regular savings account or MMA, you agree to deposit a set amount for a set term, 3, 6, 9, or 12 months, or multiple years up to 10. Interest on your CD is compounded daily, weekly, monthly, or annually, according to the terms of your agreement with a bank or credit union. If you keep the money in place until the CD maturity date, you will receive the maximum amount of interest and compounding. If you withdraw your money or part of it early, you pay a penalty, usually in the form of lost interest. Some CDs, known as liquid CDs, don't penalize you for early withdrawal or principal or interest or both, but pay a lower rate of interest. CDs are FDIC or NCUA insured, but typically offer no provision to write checks, withdraw funds with a debit card, or add to the balance once you have purchased this. Money market accounts are deposit accounts at banks and credit unions that often are considered a great place to hold your money temporarily, especially when the market is volatile or you can't be sure of another safe haven. For the best rate, you may want to start with your list of the best money market accounts. The rate you get should be at least somewhere higher than regular savings. Find out whether MMAs you're comparing come with check writing privileges and a debit card. Some banks limit the number of transactions that can be made monthly in an account, so research that potential restriction as well. The bank where you already a customer. Other online banks, brokerage firms, and credit unions offer money market accounts. Once you've compared and identified one with a favorable interest rate yield and rules, minimum deposit and balance that align with the account, the amount you have to deposit, you simply need to open an MMA to start saving with that type of account. Interest earned on MMAs is taxable, even if it's reinvested. If you receive more than $10 of interest in a single year, you will receive a 1099 INT form to use for filing your income tax. It doesn't matter if your bank calls the interest dividend, it's still subject to taxes. If your interest form from all forms 1099 INT exceeds $1,500, you also must file a Schedule B listing the name of each institution and the interest received from each. If your MMA invests in certain tax-free instruments, i.e. municipal bonds, some or all of the interest you earn may not be taxable. If you are sure about your tax status, seek the advice of a trusted financial advisor. The combination of FDIC and NCUA insurance and low-risk investment makes a money market account one of the safest investments available. The trade-off, of course, is that MMA interest rates, while higher than those found in regular checking account and savings account, are much lower than 8% to 10% historical average return you would receive with securities and other types of long-term investment. While low-risk investments such as those found in MMAs are considered very safe, they aren't considered viable long-term investment. What MMAs are good for is providing a place to put money you don't wish to tie up as long-term investments or principal you don't wish to risk. Money market accounts are offered by banks, credit unions, and other financial institutions. They have the features and benefits of both savings and checking accounts. Like savings account, they allow you to earn interest on the balance, but the rate is generally higher than a traditional savings account. Money market account also come with debit cards and checks, allowing you to make withdrawals, transfers, and purchases, and to write checks against the balance. Check with your bank to ensure that you aren't limited to a number of debit transactions each month. A money market account is a type of savings account that allows you to earn interest, but it also may have some features and benefits of a checking account, such as you may be able to write checks and use a debit card to make withdrawals and transfers. A CD, though, is an investment vehicle that allows you to lock in a certain amount of money for a specific period of time. You earn a higher rate of interest on a CD and receive your earnings plus principal balance once it matures. If you choose to cash it in before the maturity date, you forfeit the interest. How much money do you have to deposit in a money market account to avoid fees? That depends on your financial institution. Each has its own rules when it comes to fee structure, minimum balance, and minimum deposit. You should ask your account provider whether you need to make regular monthly deposits to avoid paying monthly service charges. Keep in mind, though, that some banks may also require you to keep your balance above a certain threshold each month. If you don't, you may be hit with a fee. The bottom line is, when you're deciding to open a money market account, it involves comparing many factors and decided how important it is to you. For example, depending on the interest rate, you may concern about whether to choose an MMA or CD. Maybe liquidity is of concern to you. Between a money market account and a money market mutual fund, ask yourself whether you are willing to trade security for a potentially higher return, as a money market account is FDIC insured and a money market mutual fund is not. You may want an MMA as a place to park investable funds for quick access when the stock market makes a favorable turn or to cover emergency needs. Regular savings may be appropriate until you accumulate enough to open a money market account or a money market mutual fund. If you don't need access to your funds immediately but still want security, a 5-year CD might be a good investment choice for you. Thank you.